is Friday, June 19th. Markets are technically closed today for bank holiday, Juneteenth, but I'm going to be going over the trade from last night's Asia session. Ran for about 200 plus points. So yeah, let's get into that trade. I need to put that back. View, float on top, and forget this. Okay. So yeah, let's get right into that trade. So before anything, let's go over what the market was telling us. So we had all-time highs and a lower high right here. So obviously market sold off after sweeping out internal liquidities right here. All right, so coming into this week, we had a nice V-shaped recovery after taking out the new week opening gap. V-shaped recovery, breaking through this gap into higher. So then what? Well, we hit this fair value gap right here. This is a higher time frame 4-hour gap, 1 hour, 15-minute, and so we reject off of that, right? So we reject off of that gap, and if we look, this is a 15-minute fair value gap rejection. So right here, 15-minute fair value rejection, pretty large gap, and typically when we come into Asia session after a large New York pump, we're going to reverse because Asia does not have a lot of momentum, especially after this large move up. And so with that being said, there was a chance for us to come out and sweep this liquidity, not so much the London high. So what I saw was we had resting draws below New York and London. And so those were clear draws for the market to take out, especially this internal draw right here. Equal lows and this one right here. So those are going to be very important for us to target. But the main thing here is on the 5-minute. So we had a 5-minute draw or liquidity sweep, right? Put in a high, a higher high, and then a lower high. So especially coming into Asia, we had that lower high after a liquidity sweep, and we had a 5-minute gap right here. 5-minute gap right there that we tapped into, bounced off of, and then we broke it coming into Asia. So that's very important. So 5-minute gap. So another thing that we need to mark out is the lower low inside of the PM of New York. This is an internal draw or an internal liquidity sweep, as well as right here, this higher high. This is also a liquidity sweep. So this allows me to find this, not that one. It is, I believe, on the 15-minute. Yeah, there was an order block. We can use this right here. Order block right here, the last move down before price moves up. All right, we can bring that across. And this is our order block or breaker block, whichever one you want to call it. It's a breaker block because price did break through it. And so what that tells me is, okay, we had this initial 5-minute break right here to the downside. We tried to retrace and we put in a lower high, bearish. We had this 5-minute break right here. We broke, retraced, put in a lower high, bearish. We had this order block. We broke, we retraced, did not go any higher, bearish. We had a lower low drawn liquidity sweep in New York to take out this liquidity, higher high, did not break through this 15-minute gap right here to put in a lower high, bearish. Draws below, perfect setup. So what you could do is you go down to the 1-minute time frame, right? Sorry, it's a little laggy. 1-minute time frame, we wait for price to break below the order block. And you could even make this like a little bit different, right? Because it's on the 1-minute, the whole leg. But you get the point, right? price broke below the order block, you could get in on this break, you can get on the retest, it don't really matter. We're going to go short right here, and we're going to put our stops right above this high. You can put it above the 1 minute gap or the 5 minute gap because there's a 1 minute gap right here. But yeah, let's just assume where stops are right here. Cool. Whatever. Okay, so now we're going to jump back to the 5 minute, and this is where we're going to watch our trade. Cool. So now we're going to target these internal lows, the draws, the final TP down here at these equal lows. So TP1 hit, TP2 hit, and final draw hit for 250 points, right? Risking right around 55 points. So that is a 1 to 4.5. So pretty banger trade. And as price is moving down, you can trail your stop. Obviously, once we get a pullback and push below, you can trail to the high, and so on and so forth. But that would have been the trade I took last night. Unfortunately, I was asleep. This is just a trade recap of how price moved. And yeah, once we get a nice V-shaped recovery right here, you can just do the same thing on the way back up, right? We swept out the draws, consolidation right here, V-shaped recovery, consolidation, and we're off to the races. So hopefully that helped. Let me know in the comments below. And yeah, I'll catch you guys in the next one. Deuces.